Hey everyone, it's Evan here from the Trade Risk on Tuesday, May 15th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So let's jump right into the charts here with the S&P 500. We're looking at the cash market and we're looking at a weekly time frame. Each bar represents exactly 1 week worth of trading. So it is only Tuesday, but let's look at what's gone on so far this week, 2 days into the week. We are down almost 1% right now on the week 22 handles here in the S&P 500. And notice we started the week off on a positive note here. We tried to push up above last week's highs. In fact, we did temporarily, but then we sort of reversed, turned red, and we are now trading at the current lows of the week and about 30% or so of a retracement into last week's progress to the upside. So we get a little bit of a retracement going on to last week's 2.4% rally. Now, a couple of things to notice here. In the S&P 500, we talked a lot about this trend line here in last week's video. Everybody's going to draw this at a slightly different angle and placement, but this general area here right under where price is, and in fact we'll look at the S&P 500, the SPY ETF at a couple of other near-term levels that I think are important, but I think this area here right around this 2700 is going to be an important short-term call it an upper level momentum area to hold for the bull case. You can see we are coming back down to potentially retest this trend line. You can see these moving averages on my chart. They're fast moving averages. These are weekly moving averages, but still we're trying to get some separation there. We finally got some bullish alignment for the first time since really mid to end of March. And now we want to see if the bulls can, continue to hold this market higher so we can start to get some upside momentum brewing. That's something we haven't seen in quite a long time. So if we in fact do come rolling right back down here, we're going to sort of deflate any upside momentum that we were starting to gather last week. So from a weekly perspective here, not a whole lot has changed right now. We do have a minor pullback in play. It's going to depend on how we finish off the week. Ideally the bulls are going to keep us above say 2700, 2690 to finish off the week, and the most ideal, of course, or when this party continues to move to the upside, would be back positive on the week and above last week's highs. So let's take it to the daily chart. I think we got some more interesting levels to look at in the shorter time frame, and we're going to cut it over to the SPY ETF. So the first thing I want you to notice here with the SPY ETF is take a look now at this trend line on the daily chart. So a little more refined. Again, everybody's going to draw this different way. I don't want to get too hung up on exactly where this lies right now, but notice if I kind of connect the bodies here of the January high, the March high, and then where we are trading more recently, you can see we got a nice sort of back test exactly at this level. And in Friday's video, when we did our weekend video, sort of mentioned this 270 to 271 level. This was the upper area that we wanted to see the market, very reasonably pull back and test, and we're exactly doing that right now. So no harm yet, but we wanted to see how the market would react here. And again, I think if the bulls are going to keep this market supported and as strong as possible, we would like to see a continued closing price over 270 or so. So we got this back test of this trend line here. We have this gap in here, which we didn't quite fill all the way back from Thursday when we had this slight gap higher here in the SPY. We also got the 8-period EMA, and we also have this pivot right here from mid-April. So when we look at what the market rallied to back in April, we got all the way up to about 271. So if we were to actually sort of project this sideways or horizontal level right in here, we also, you can see right where we kind of opened up, right in this cluster here. Again, you can refine this, call it 271, call it 270, but this is sort of a general pivot here. So this is why I think this 270 to 271 area is a pretty important, at least near-term level to stay above. Certainly on a daily closing price is ideal, and then on a weekly bar would be even better. If we start to break below here, then we have all the way back to our good friend here, 267, which we were talking about for a number of weeks. But that would be the next big level I'd start paying attention to. And then, of course, for you shorter term traders, you can say, yes, we did get a trend line break here today when we draw this trend line from this most immediate rally here. So starting from May 3rd, which was Thursday, this reversal day, and then we kind of just climbed the mountain higher here at about this type of slope. We broke below it today. We're back testing this line. We're testing this pivot from April. We got the rising moving averages here. So a lot of kind of confluence, and that's going to be an important tell for the market for the next couple of days. Now, the other slightly bearish characteristic I want to point out today is volume. So volume today, we're seeing the highest volume in over the past 6 or 7 days. Now, it's not an extraordinary amount. I don't want to get hung over too much saying this is a major flag here. But again, it is just small pieces to the puzzle when we start to pull back. When we talked about a potential pullback, which is entirely reasonable given that we moved higher for about eight or so days in a row, we like to see those pullbacks happen on lower volume. We don't like them to come with big gaps on the open. Kind of like to see just a very methodical, kind of slower pullback to test some of these upper level support areas. Today came with kind of a sharp gap down. We still have an open gap. We didn't really get to attempt to close this morning's gap at all today, and it is coming on slightly higher volume. So that isn't the ideal scenario on a pullback, which is why, again, we really want to see how this market acts over the next couple of days around this 270, 271 area, and we'll continue to measure the volume and sort of urgency of this pullback, the character of this pullback, if you will. So that, I think, sums up most of my thoughts here on the S&P 500 on this Tuesday. Overall, I think, structurally the bulls still have the benefit of the doubt here. But if we start to weaken up any further, if we start to, see increased volume and we start to continue to take down 270, fall back into this old kind of range and all these old levels that we finally broke out of last week, then, we're kind of back to the old choppy mixed signals drawing board. Or worst case, and again, I'm not saying this has to happen, but this, turns into a very nasty, fast kind of false breakout, and we in very fast fashion unwind here. Again, not enough evidence to say that is the case here, just putting out all possible scenarios. So that is the S&P 500. Let's go to the bright spot of the market, which continues to be the Russell 2000. This thing, I think the NASDAQ was down over 1.5% on the lows. This, was struggling to stay red today, the small cap here. And, partly I don't try and really kind of figure out reasonings as to why certain things are moving like they are. I think that's just it's maybe an interesting thought exercise, but I don't think it really gets us anywhere to really understand as short-term traders that are trading on technicals and sentiment, really the understanding here. But chalk it up. I would say most of the outperformance here on the Russell 2000 to the dollar. The dollar index today breaking to new 2018 highs. We didn't close at the highs of the session here, but still 62 bips to the upside. So a new kind of price high in 2018. And when we get this strong rally here in the dollar, small caps tend to be the outperformers, or on a relative basis, they are going to perform better in a rising dollar market than their large cap components. And I think there's a lot of research and past examples that supports that thesis. But I think that certainly does explain the help here of the recent relative performance of the IWM over the past couple of months, really, or certainly a few weeks to say the least. But you can't be, it's hard to ignore this. Again, flat here while, the Qs and the S&P 500 are down nearly 1% on the day. Again, a complete split in the market isn't necessarily good either. You don't want to have indices, really going in complete opposite directions. That doesn't necessarily say that things are healthy, but it does say that, look, the IWM is still trying to hold up this market here. It is still trying to keep things on track. That is a risk appetite sector of the market, component of the marketplace. So it is something that is certainly in the bulls' favor. Nice rising 8 and 20 period moving averages here. Clear resistance now at 160. That's kind of a third time where we failed here just yesterday to take out these highs and close above these highs. So this is going to be our upside level to pay attention to, especially on a weekly basis. Finally, we got the Qs here, which again ended lower, minus 1.1%. We're down the largest here today on a relative basis, and you can see the volume and uptick on this sell day here over the past 7 days. As we've marched higher, we've seen volume just continue to taper off. Then we get this gap down and selling come in, and we see a nice spike in volume. So again, not the ideal scenario. We got this gap filled in here. Remember this island reversal all the way back in beginning of March? That was filled yesterday. We got all the way up basically to the penny, then reversed and closed near flat on the day, and then followed through lower. So we got this open gap in place now to the upside. So we get a bearish gap that is open. We got rising 8 period that we're testing here. We broke, say, this trend line. All in all, some minor technical damage here, but if we continue to roll over, if we see increased volume and selling pressure, again, that's going to, certainly not favor the bull case at this time. So that is the market environment overall. I think if you're a short-term trader, you're paying attention to the next couple of days. If you're longer term, you're probably, still sleeping, not really paying attention to these nearby levels that we're talking about, on this daily chart. So that's the market environment. Let's get into some other markets here. It wasn't just equities that had a wild day today. TLT and really, fixed income, the bond market in general here was certainly moving, and one could argue was really the bond market that is moving the equity market here. And the long bond TLT now is back to this very critical 117 multi-year support level. So this is where we have held in here, going all the way back to really 2014 when we emerged in this in this rally higher here. We've been above this 117 level. We tested it in 2015. We've tested it multiple times, and now here we are again, potentially making new closes for, new closes below that level would be a pretty significant high impact level for the yield curve and for the bond market in general. So we did get a high volume day. We got a push off of the lows. So buyers did step in here. The selling pressure didn't hold into the close. We didn't close at the lows. We didn't pierce through, we didn't close below all of the new 2018 lows. But it is something that is still very vulnerable. We got this big gap down from today, and we have momentum that's going to start to build to the downside. So bond buyers here are going to really need to step up their game to prevent a technical breakdown of pretty big significance. So TLT, something to certainly pay attention to into the rest of this week. Pay attention to that weekly close. Go to oil next. You can see this is still kind of just humming away up here near highs. It's consolidating, got 4 days tight and sideways, and this bull trend continues to remain intact. It is respecting all kind of technical levels now to the upside. So for now, the bull train here continues, getting a little bit long on the tooth, but it's climbing that wall of worry, and it's continuing to just march higher. So let's respect it and wait for some technical short-term breaking of some levels before we start to try and aggressively play that other side. At least that's my personal approach. Everybody's got a different strategy for it. So that's USO. Natural gas here ended flat on the session. Really tried to get going here to new highs, new multi-month highs here. It's been struggling with this 23 and a dime level for the past couple of months, really trading below it. It briefly got above it in March around here. Again, this is the ETF that does have a little bit of tracking error. So when we look at the spot price of natural gas here, you can see it is threatening a fresh breakout. It is actually above you know, these ETF prices here back from March. So natural gas, you've seen that volume pick up. I've tried to play this certainly recently right in here. I got kind of chopped out of it, or you know, stopped out for a small position, small loss. I don't have a position here, but I'm still watching this market, waiting for maybe a little more conviction. I do like the rally up here. I like how momentum's starting to build, and if we can get some closes, continued closes above 23, then you know, we start to look at some bigger levels above here, last seen in very beginning of this year before we saw that nasty kind of January sell-off. So natural gas, I like the potential there for this to start to lift higher here. If we look at it in this sort of channel formation, we've been failing as we get to the top end here. Let's see if that changes this time around. Pay attention to that weekly close. So that's natural gas. And the gold markets, gold and silver markets, metal markets hit hard today as well. We saw big moves all around, really. And GLD here, 1.61%, very clearly taking out this prior support level. Remember, we talked about this 124 area as holding, and especially on a weekly basis, we had just continued to get saves here by the bulls right at this support level around 124. This would be a major save by the bulls now if we got a complete reversal of this 2% sell-off that we've seen in just 2 days worth of trading. So if we can manage to get a weekly close all the way back here north of 124 again, that would be impressive. But for now, this is looking like it's potentially a breakdown here. If we zoom out, you can see we do have this longer term trend, that channel that is coming into play potentially from the 2016 lows. So maybe we do get some type of short-term bounce here. This was a pretty big move, good volume here. So we got to respect it. That support has been broken. Now I would want to be on sort of an avoidance of this until we reclaim 124 or so. If you're real tactical, maybe you get some type of bounce here off this level. So gold suffering some sizable losses there, and silver not quite as large. We actually held on to these yearly lows kind of right back nicely, testing the bottom end of this channel again, the sideways range right around 1530, and did not take out the lows here back from just a few weeks ago at the very beginning of May. So a little bit of perhaps positive divergence there in silver. Again, we'll want to pay attention to see how that finishes off the week. So that is it for this week's midweek video. Lots going on here in early weeks trading, and I think a lot of these charts are at some pretty interesting spots where I'd be paying attention to the weekly bars. I know that's boring, but to see how we close out the week and see how we get those closing formations, I think are going to be pretty important in a number of these markets. So that is all I got. Thanks so much for watching. I should be back tomorrow with some trade ideas, and then Friday again for the weekend video. So subscribe to our YouTube channel if you like these videos and want to stay updated. Till next time, thanks so much, and talk to you tomorrow.